Hello everyone, welcome back to my channel. Today I would like to talk to you about tax advantages when you are owning an investment home. So let's take a look at what we have. Hello everyone, welcome back to my channel. For some of you, owning a home is very critical for as a way for you to earn additional income, right? Rental income. So a lot of you putting the house, buying a house as an investment home, and as that is actually not only a way for you to earn additional income monthly from the tenant, but also a great way for you to reduce the tax. But the tax that you have to pay for IRS every year, right? Now, before we move on, I just want to emphasize that I am not a CPA, or I'm not anyone who can do any tax return. What I provide to you here is just general information. Depending on the situation, you should ask your CPA about your specific situation and about the tax advantage that you have. Okay, but here's some six tax advantage that you have when you own an investment home. Okay, so number one, you can deduct your expenses. Okay, so this is I think a lot of people already aware of this, is that you can deduct all of your expenses when you operate an investment home. Some expenses that you cannot claim when you own a primary home. For example, property taxes, okay, property insurance, mortgage interest, right, property management fees, or any repair that you may perform on the building, right? So those are the things that you can minus. So let's say if you earn an income of rental income of $24,000 per year, right? And then you have to pay taxes, property taxes, right? 3 or 4,000. You can deduct that. If you have to pay insurance, 1,000. Okay, you can reduce the income that you pay by reduce the property insurance, right? Mortgage interest. What if you do a mortgage, right? All the interest could be deductible as well. Property management fees, right? Monthly, you have to pay for someone who managed your property. You can claim that as a deduction as well. Basically, all the costs associated with maintain the business, right? Maintain your property, your investment home, you could claim as a deduction as well. Now, all of those that I mentioned generally not qualify. You cannot claim deduction on the primary home for those. Okay, so only investment home that help you be able to reduce the more. So basically, you receive $24,000, but then you only have to be taxed on a very small amount of that $24,000. Okay, now here's some other thing as well. If you do have a company, a real company that perform all kind of advertising, right? All kind of, or you even have to have an office space, right? Or you have to consult with a lawyer, a real estate agent, or traveling because of the business, because of the renting business that you have. You can also deduct that from the monthly rental income as well. So really benefit, right? So the investment home give you that opportunity. Primary home doesn't give you that. Okay, so that's number one. Deduct your expenses. Okay, now number two, depreciation over time. Okay, depreciation cost over time. All the homes gonna be depreciated, right? All the mechanic, all the machine gonna be depreciated. So anytime that you install a new piece of equipment, for example, an AC, right, you can claim the depreciation cost on that as well. And depend on the equipment, right? Depend on the equipment, you may have different deduction amounts. Okay, AC, water heater, appliances, all kind of appliances, right? You can deduct the depreciation cost as well. Even the house, right? The cost of buying a house, the house is depreciated as well. So, and then based on the IRS, okay, 27.5. Okay, whatever the cost that you buy the house, divide by 27.5. That is the minimum. That is the amount per year that you can claim for deduction. So very big number, right? For example, if you have a $300,000 home, you bought a $300,000 home, so every year you can basically deduct about $10,000 a year, about $11,000 a year, because of the depreciation cost. Come back to the original example, $24,000, right? For rental income, you can deduct right away $11,000. So basically, you only have an income of $12,000, right, to be able to tax on, and then you claim all other tax expenses, all other expenses. So it's pretty much become nothing for you at the end of the day, right? But depreciation cost, and again, home, the entire house, AC, appliances, those are the things that you can claim for depreciation. Okay. The next advantage, the next tax advantage is that you can use a pass-through deduction. Now, this is only in the case that you own a house using an LLC on an S corp, okay, or some kind of partnership, okay. So basically, you can claim 20% of qualified business income on the personal tax return. Okay, on the personal tax return. For example, if you receive again $24,000 back in, for example, the original question or original example, right? $24,000 in terms of rental income. So 20% of $24,000 is about $4,800, right? $4,800. So basically, if you use a partnership to own the investment home, you can claim about $4,800 deduction on your personal income. Okay, so this is very beneficial. So it's not only just reduce the amount of rental income, but also reduce the personal income as well, reduce taxable personal income as well. So that is very good, right? It's only number 3, by the way. It's only number 3, and you already have the tremendous benefit of owning an investment home right here. Okay, so $4,800 on top of a $24,000. So that's huge, right? That's 20%. Now, one thing to note though, this tax benefit is because of the Tax Cuts and Jobs Act of 2017, and it's set to be expired by 2025. So if you're owning an investment home, you still have 4 more years to claim. After that, who knows? Okay, so that's number 4. Now, that's number 3. Now, number 4, you can take advantage of capital gain. Okay, short-term capital gain. We're talking about short-term capital gain and long-term capital gain, right? For all, if you sell the property within a year, then you're gonna be taxed as a short-term capital gain. Okay. Now, here's the thing. But if you, while you not, sorry, and then I want to make sure that it is a year is correct. So I just want to look at this real quick. Okay, so for the home, okay, if you sell before the 1 year period, then you are taxed as short-term capital gains. Okay. But because owning a home is special, right? So if you can hold the house for more than a year, the capital gain become a long-term capital gains. Now, the benefit of that is that for short-term capital gain, you have to pay at the regular income tax bracket, which is generally higher than the short-term capital gain. And basically, you can in some situation you don't even have a long-term capital gain. Okay, for example, if you are a married couple that make less than $75,000 a year in joint tax return, your long-term capital gain is 0. Okay, it's just 0%. So you don't even have to pay anything on the long-term capital gain, right? So some people are afraid that selling the investment property gonna be able will require them to pay tax on the long-term capital gain. But check with your CPA. If your income is not high enough, right, at a certain level, you don't have to pay long-term capital gain even. Okay, so that is a really great benefit of having only, I don't know about stock, I don't know about other investment strategy vehicles, but for homes, you can do that, okay? So first of all, you can avoid paying short-term capital gain by holding the property for at least a year. Secondly, even if after a year, if your business, your income is not high enough, you still don't have to pay for any long-term capital gain. Okay, so that is a really good benefit for those of you who are thinking about selling the investment home. Okay, if, for example, though, remember the capital gain, right? If your income is higher than a certain level and you do have to pay long-term capital gain, now there is another benefit called 1031 exchange that basically allow you to defer the tax that you have to pay at this time. Okay, now this is not to reduce or to remove the tax, right? But it's basically say to defer the tax later on. Okay, to defer the tax until later. Okay, so you don't have to pay the tax now as long as you are buying another property or other properties within a certain amount of time before the deadline, so you don't have to pay the long-term capital gain tax on that. Okay, so that is the good benefit of number 5, that you can, even if you hit the level, you still don't have to pay the long-term capital gain. Okay, now there is a new opportunity as well called opportunity zones. This is also based on the Tax Cuts and Job Act of 2017. Okay, basically some area in the countries that within these opportunity zones, and you can have even more deferred tax on the capital gain for these areas. So check those areas and make sure that you invest into those areas to be able to defer your long-term capital gain. Okay, so that's number 5, right? You are able to defer taxes with incentive program. 1031 exchange or opportunity zone are the 2 examples. Okay, number 6 and last. Okay, you can basically owning a whole bunch of investment home. Okay, you can be a self-employed. Now, if you are working as a self-employed in some other with some other owner, right? With your own business, right? You know that as a self-employed, you have to do something called FICA tax, right? There's a Social Security and the Medicare tax, okay, which is really high. Now, if you, for example, if you do a real estate agent like me, you do have to pay those self-employed tax. Or if you do a nail salon, right, you do have to pay those self-employed tax. So if you do owning an investment home and the amount of and the income that you receive from the rental is not considered as a FICA tax, and therefore you don't have to pay for Social Security and Medicare. So that reduces your tax liability, right? This reduce the amount of tax that you have to pay compared with, let's say, $24,000 in rental income. You have to pay less medical, you have to pay 0 medical and Social Security tax, Social Security on that. But if you have 24,000 as a real estate agent, as a nail salon, as a self-employed, you do have to pay a certain amount of tax for Social Security and Medicare. Okay, so that is a really good benefit. You don't have to pay those if that is a rental income. Okay, so those are the 6 benefits or 6 tax advantage of owning an investment home. I'm gonna go quickly over summarize. Okay, number 1, you can claim all the expenses that you use to manage the property. Number 2, you can reduce the taxable income using depreciation costs over time. Okay, number 3, you can take advantage of a pass-through deduction if the home is owned by some kind of partnership, an LLC or an S corp. Okay. Number 4, you can take advantage of capital gains. You don't have to pay for. You can hold a house for more than a year, and you now taxable using long-term capital gain instead of short-term capital gain. Okay. Number 5, you don't have to pay the tax yet at the time that you sell the property, as long as you buy another other properties, right, using 1031 exchange or opportunity zones. And number 6, last but not least, for rental income, you don't have to pay for Social Security and Medicare. Okay, again, my name is Longley. I'm a real estate agent in Arizona. I am not a CPA. I'm not authorized to give you any advice in terms of tax. Okay, this information that I provide to you is only general information. Okay, you should check with your CPA about your specific situation before making any tax return. Okay, thank you. My name is Longley. Cell phone number 602-515-2442.